All right, everyone. So, what are the requirements that the banks and the lenders have in processing Paychecks Protection Program loans? And what I'm going to do is I'm going to share the screen. One of the things it would be helpful to understand is where are the lending institutions coming from, and how much are they making, how much is the SBA paying the lenders for processing these fees, and what benefit is it for them to do so. And so I'm looking at the PPP interim final document that's directly from the SBA. In an earlier video, I showed exactly where it is on the website, but all of this is public information. They're making 5% for loans under $350,000, and they're making 3% for on loans for more than $350,000, but less than $2 million, and 1% for loans of at least $2 million. So if it's $1 below that, or below that, it looks like it's 3%. So that's what the banks and lending institutions. Also, I notice a lot of credit unions and regional and smaller banks been able to process some of these loans, or at least the PPP loans, a lot earlier, and we're moving faster than some of the bigger banks, because they were just trying to. Some of the bigger banks are trying to figure out exactly how they want to implement a lot of these things. So, but yeah, so this is the requirements. Now let's go into the underwriting criteria, or what do they need in order to process the application, to approve it? What are their requirements? And so it says here what lenders have to do in terms of loan underwriting. So what they have to do is confirm receipt of the borrower certifications contained in the Paycheck Protection Program application as issued by the administration. Administration meaning the SBA, the Small Business Administration. And that's the application that everyone has to complete. The 2483 application. If you note here, certification and authorizations, all these certifications that you have to initial off on here, they one of the things they make sure that that is initial and signed off before they process it. And then confirmation receipt of information demonstrating that the borrower had employees for which the borrower paid salaries and payroll taxes on or around February 15th of 2020. So for those businesses, to say you have more than you have more than one or more employees, typically you're filing the taxes, which are 940 and 941, which is payroll tax documentation that makes it really easy to verify and demonstrate that you had employees. Now, what if you're not? What if you're a sole proprietorship, or so forth? I'll talk about that a little bit later. But look here. Confirm the dollar amount of average monthly payroll costs for the preceding year by reviewing the payroll documentation submitted from the borrower's application. So on the borrower's application, and each sole proprietorship, independent contractors, look here, you got here the monthly payroll, which was from last year, um, uh, amount, and then they, obviously that times what, that 0.25, and then of course the number of employees. That's what they're looking at, or looking for. All right, so the BSA and all this information, this is like um anti money laundering, and you know terrorism kind of stuff that, they have to, all banks comply to. And so that information's in here. Um, but here, each lender underwriting obligation under this PPP is limited to the items above, and reviewing the Paycheck Protection Application Form, borrowers must submit such documentation as necessary to establish eligibility, such as payroll processor records. So that maybe that be from your payroll company, your bookkeeper, in-house bookkeeper, accountant, CPA, the payroll tax filings, so that 940 and 941s of 940 for all 2019 and 941s your first quarter of 2020. Form 1099 MISC, or income and expenses from a sole proprietorship. So for last year, if you hadn't filed your taxes in 2019 as a sole proprietorship, this might be one reason to do so. So it'll be easier to have documentation to show what transpired in 2019. I mean, I guess if you have your 1099 documentation, you can show that to show, but and I'm going to show you what the banks have to fill out on your behalf. This is probably one of the reasons why a lot of sole proprietorships, independent contractors, like if the information is not matching up from who filed the payroll, that's probably the reason why your application is not getting processed fast. So for borrowers who don't have such documentation, the borrower must provide other supporting documentation, such as bank records, sufficient to demonstrate the qualifying payroll amount. And then that's pretty much it. And here's what the lenders have to, you have to sign in the test, and then the lender has to attest all your information as well that has been submitted. So if they're having a hard time going through your information, so the good news is it's not about how much money your business made and all that kind of stuff. It's more so about the payroll. Now for the sole proprietorship, how much the business has made is important, because that determines your payroll, right? Pretty much after all you got your income, and then you got your expenses, and then whatever is left over is typically what is left to pay you and your household, right? And so you're going to have to provide some supporting documentation to show, how this is the money that you have to live off of in order to operate your household, um, you know, and or the business has to pay you in your household. So I wanted to show you that documentation to show you that, um, you know, it's it's even the documentation is easy, and the documentation is not, I guess, at the same time. And so if you have any questions, feel free uh, to message me, and I'll do the best I can to answer your question. All right, thank you.